SoFi stock. I am officially a shareholder of SoFi. Yes, folks, it's been a flirting game here for a bit, but now I've officially dove into the pool and I am a SoFi shareholder. So I bought 1,000 shares of this stock yesterday. I bought another 1,000 shares here today. I have started. Keyword is started my position in SoFi. So in this video, we're going to talk about a few subjects. Very important. Okay. First one, we're going to get into why I'm bullish on the stock. Obviously, that's going to take up the majority of this video, why I'm bullish. Then we're going to get into a very important subject that I don't think hardly anybody ever talks about in regards to SoFi. Everybody talks about the bullish points, but what happens if we have a great financial crisis 2.0? What happens to this company? Do they go bankrupt, in my opinion? Does the stock go to $1, $2? Like, what does that look like for the company? What could the financials look like in that sort of situation? So we're going to speak about that in this video here today, and I think this is something that has to be considered out there. Fourth thing we'll speak about here is the public count. So I haven't bought this in the public count yet. I only bought it in my ally account. What about the public count? Would I buy this in my public count as well, which is kind of the holy grail account? We'll speak about how big I want to build this position out to. Okay, I've started here with 2,000 shares. Would I want to own 5,000 shares, 10,000 shares, 50,000 shares? Like, where am I trying to take this? And then the last thing we'll speak about here today is when I'll stop buying this. So I'll share exactly the price points that I will look at stopping on buying SoFi stock here. So yeah, action-packed video here today, folks, all about SoFi. I appreciate y'all joining me. Only two things I ask from you: smash a like button, make sure to subscribe to the channel. I've been prepping this video for the last several hours for you guys, so that's all I ask from you. Smash a like, make sure to subscribe. That's it, okay? If you want to join me for the massive Twitch live stream tomorrow, that'll be pinned comment down there, okay? That's going to be insane. Probably a record-breaking live stream in the history of my Twitch channel, I'm thinking tomorrow. Yeah, Amazon, Apple, and Meta reporting after the bell. It's going to be insanity. So pin comment down there if you want to join me for that one, which you do. So make sure you join me for that one tomorrow, okay? Alrighty, guys, so let's get into this. Why I'm bullish on SoFi. And then we'll get into the GFC and all the other things, okay? First off, it's important we understand what SoFi is, okay? A lot of people, I think, try to wrap SoFi into this, into that. At the end of the day, SoFi allows you to do just about anything a traditional bank might allow you to do, right? Personal loans, banking, mortgage loans. You can do student loan refinancing, invest through it. I mean, all those sorts of things, right? Credit cards. At the end of the day, SoFi is one giant, fast-growing bank with a big differentiation, and I'll explain that differentiation in just a moment, right? But that's what it is. If people want to try to put it as a tech company, and we'll speak about the tech side in just a moment, but at the end of the day, when you really break it down, like where's SoFi making all their money? It's from more like banking-related activities. So it's just one fast-growing giant bank, but without a very key thing, and that is physical locations, okay? If you think about the big banking giants of, nowadays, right? They're Chase, Wells Fargo, Bank of America, and you can go across pretty much any big city in the world, and certainly in the United States of America, and you're going to see these locations all over the place. These physical locations cost a lot of money. You have to have employees in these locations. Now, they've tried to automate more of the process over the years, but still, they got tellers, they got bankers in these locations, right? And there's a whole cost associated with that. And so SoFi just kind of went the route of, we're not going to have all these big physical locations with all these branch managers and all these tellers and things like that. We're going to go for the new school, more millennial types, the Gen Z types, and we're going to start attracting those folks. And then hopefully we can attract some other folks that might be a little more into technology in general. But that's who is SoFi's going after. And so SoFi's trying to build the bank of 2050, not the bank of 2020. There's a big difference. Wells Fargo, Chase, Bank of America, they built the banks of 2020, right? They built the banks of these past many decades we've been along, where SoFi is trying to think about how do we build a financial institution that is really for the next, 20, 30, 40 years, okay? So very different thought processes there. And then when it comes to tech platform, SoFi acquired Galileo back in 2020, and this was something that, from my understanding, SoFi was using previously, and this is, it's a pretty amazing technology. It helps other financial institutions just kind of automate their whole processes. They have their own APIs, and they can, if you want to read through more about Galileo there, you can. And Galileo has been attracting more customers over time here. So at the end of the day, SoFi is a giant bank with a tech component of it, but it's really built for the next 20, 30, 40 years versus kind of the old school business model, which was really built for the last many decades here, okay? Now, when it comes to SoFi's latest financial statements, I give them a B plus grade. Their total interest income was, over double up year over year from $307 million to $645 million. If we look at total interest expense, it was up to $255 million. Net interest income up to $389 million versus $208 million in the same quarter last year. So night and day difference. And then they went to a net income of $47 million versus a net loss of over $40 million in the same quarter last year. So, just a massive accomplishment for SoFi overall. This is incredible. Right, if we go back to like September 2022 versus this latest quarter, right, they went from an operating loss of $74 million to operating income of $51 million, right, in 5 quarters. That's insane. That's absolutely insane, right? I would call that the second most impressive turnaround I've seen when it comes to going from operating loss to operating income. It's the second most impressive I have seen. There's this other company out there, okay? And maybe some of you guys might know this company. But from September to September, this company hasn't reported their next quarter numbers yet. I can't wait for those, by the way. But they went from September from about a $62 million operating loss to a $40 million operating income. That was the most impressive I've seen over the past year or so. And I can't wait to see their next operating income when this company comes out with numbers. By the way, do you know this company? You might. Palantir. That's that company, Palantir. So outside of Palantir and how fast Palantir switched their operating loss to an operating income, I think SoFi is the second most impressive I've seen really over this past year. Okay. Now, when it comes to SoFi, they're stealing market share in a massive way, right? They went from 5.2 million members, I call them customers, but they call them members, to 7.5 million in this most recent quarter. That's just stealing market share, right? And the great thing is for SoFi, they might get you through the door in regards to, let's say, a savings account or something like that, right? So, okay, you set up your savings account, and next thing you know, they're going to have you set up direct deposit, and next thing you know, you might invest through them, or you might open a credit card, or you might do this or that. There's so many different products that SoFi offers that it's just about getting you through the door. It's just about acquiring you as a customer, very similar to the traditional banking model, right? I remember JP Morgan many years ago, this was like 2008, I needed to set up a bank account. I got my first job outside of working for my dad's pool business, and that was cleaning dishes at Einstein Bagels. And I needed to get direct deposit set up. And so guess what? Chase had an offer. This was like 2008 back then. And they had an offer that if I set up direct deposit with them and had direct deposit go through for 3 months, I would get $250. And for me, I was making like $7.50 an hour. Like $250 was like all the money in the world. And so that was great. Chase got me as a customer. And guess what? I still bank with Chase all these years later, right? Isn't that incredible? They acquired me as a customer, and I've gotten so many products over the time. And so Chase really acquired me for maybe that first $250. But do you know how much money Chase has made off me over the past 15, 16 years? I mean, if I was to really run the math on it, it's easily, I would say, tens of thousands of dollars. Let's just put it that way. Tens of thousands of dollars they've made off me from a $250 acquisition many, many years ago, right? So it's fascinating what you can really do with a business model like this. This is why these companies are so valuable, because when they can acquire somebody, I mean, it's massive for them, okay? Now, if we look at their net interest income, it was up 139% year over year for that 3-month period. And here's the deal. They're offering SoFi Money. It's offering about a 4.6% rate. This was as of January 29th, right? And it's pretty fascinating because you look at a rate like that, and that's beating most other offers. It's beating pretty much all the traditional big banks, but it's even beating a lot of the other online competitor type banks with that rate right there, right? Now listen to this. This is massive right here. More than half of newly funded SoFi Money accounts were setting up direct deposit by day 30 in the 4th quarter. That's huge. This is something you want to see. More than half? So more than 50% setting up direct deposit within 30 days? That's something you want to see. That's like the holy grail Remember what I told you Chase did with me back in 2008, right? Set up direct deposit. And then as I got my job at Walgreens from there, guess what? Set up direct deposit through Chase through there. And then when I worked for Quick Trip, guess what? Set up direct deposit through there, and then kept, using them for my business bank accounts and all those sorts of things over the years, right? Fascinating. So this is really, really good news. Now, the Federal Reserve, this matters, okay? Here's the deal. This matters for SoFi. The Fed seems like they're not going to cut rates anytime soon. Fed Chair Jerome Powell, this just happened today, literally in the past hour or two, says March rate cut is not likely, right? So net interest income is going to keep pouring in for this company for the next year, okay? Even if the Fed starts to cut in the back half of the year at some point in time, right? They're going to likely be small cuts. And so the net interest income is going to be in a great place for SoFi for at least a year, but potentially years to go in the future. That depends upon many various factors. How well does the economy hold up? Can we stay in a normalized interest rate environment for the next several years, right? Because we haven't really been there for a long time, like almost my entire adult lifetime. So net interest income is going to likely keep pouring in, and that's good news for SoFi overall. And they should be able to continue to have very high rates for different products like savings accounts, for instance, right? Now, looking beyond 2024, management expects I thought this was important. There was a guidance here. Looking beyond 2024, management expects 20 to 25% compound revenue growth for the time periods of 2023 through 2026, assuming no meaningful changes in macroeconomic environment and no significant new business launches or acquisitions. This implies 50% compound growth for financial services revenue, mid 20% compound growth for technology platform revenue, that could be Galileo, right? And mid-teens compound growth for lending segment revenue. This is expected to drive between, listen to this, 55 and 80 cents in GAAP, generally accepted accounting principles, earnings per share in 2026. So not non-GAAP, not like let's take this out, let's take that. No, this is GAAP numbers, okay? That's huge. When I read that, between seeing the B plus earnings report, the company getting to profitability, but then when I saw the guide for 2026 EPS, I was like, I got to get on board. It's now or never. I got to get on this train and I got to do it now, okay? Moreover, we see 20 to 25% EPS growth beyond 2026, reflecting both the continued growth of the core business growth plus the added benefit from new business lines launched in 2024 through 2026 time period. Fascinating. So basically, SoFi's leading us. What is SoFi basically telling us, okay? SoFi's basically telling us is we got profitable, we're going to stay profitable, and profitability is about to do what? It's about to go to the moon over the next couple years. And not only that, they're telling us one other last key thing here. They're telling us that they're not going to stop growing rapidly in terms of revenue. They're not going to stop rapidly growing and acquiring customers and taking more and more market share, especially as millennials and Gen Z enter the realm of setting up direct deposits, setting up bank accounts, right? SoFi says, we're going to do a better job acquiring the new generations, the new 18, 19, 20-year-olds, the people that I was once acquired by Chase. SoFi says we're going to do a great job, basically, of acquiring those folks. And those folks are going to relate much more to our product and then go in and set up that bank account at Wells Fargo or Bank of America, like maybe their parents did or their grandparents did, right? And so we have a fascinating situation. And then guess what? If you acquire those folks when they're 18, 19, 20, 21, 25 years old, guess what happens over time? Their net worth grows and grows and grows. Their needs for more financial-based products grows and grows and grows because the next thing they know, eventually over time, they want to invest. They want to take a mortgage out. They want to get a car loan. They want to do this or that, right? They want to get a credit card. And so their needs for financial-related products goes up and up and up. As their net worth goes up and up and up, their income goes up and up, right? And so SoFi's there to, guess what? Make all that happen. So I can see how SoFi can feel comfortable even talking about years out in their business model because they understand what it takes to acquire a customer. They understand what it takes to keep that customer around and build on that customer and acquire and have them acquire new products over time. So this is fascinating, okay? Now, when we look at SoFi, here's the deal also in the short term. I don't know what analysts are doing here. Based upon, this is what Seeking Alpha has up here, okay? And this is supposedly based upon 18 analysts. 6 cents of EPS expected for 2024? What? What? No. Okay. I don't see there to be in any way possible, regardless of what happens in the economy, regardless of what happens with Jerome Powell and rate cuts and blah, blah, blah. I don't see any way SoFi doesn't make at least 10 cents of EPS this year. At least 10 cents. But I think there's a decent probability they could do 15 to 25 cents this year. So there's a big discrepancy between what I believe is going to happen for SoFi in 2024 versus what analysts are at here. Let's just put it that way. But then if we look at 2026, right, the management team said we're doing 55 to 80 cents in 2026. Analysts are at 51 cents. So analysts are lower than even the lowest estimate the management team just gave out. Now, do keep in mind there's only 6 analysts that have numbers out there, right? But let's say the midpoint's hit, so that's about 67 cents of EPS is around the midpoint, right? That would put this stock right now at only about 11 to 12 times the 2026 numbers. Now, if the company's still growing 20%-ish, or even if they were growing 10 to 15% top line, bottom line year in and year out at that point in time, so let's say it's a much lower growth rate than what the management team expects, that's a steal deal. For 11 or 12 times, that's a steal deal. Even if they're growing 10, 12, 14%. Never mind if they're growing 22%, 24%, something like that, year in and year out, that top line, bottom line. So I'm just looking at this and I'm like, oh my gosh, like, this stock's extremely undervalued right now. Extremely undervalued based upon what I see for, coming here. Now, when I look at somebody like a Bank of America, right, this stock, their revenues went from $23.4 billion to $20.8 billion, right? Their earnings from continuing operations went from 7.1 to 3.4. Keep in mind, there's probably some one-time costs in there, but at the end of the day, like, numbers clearly massively declined for Bank of America, right? If we look at somebody like a Bank of America, they're trading about 9 times 2026 numbers. So we got a business model here that is not set up for the next 10, 20, 30 years. And, their numbers have gone very negative in the past year, and yet they're trading only slightly above where a SoFi is trading at based upon 2026 estimates here. I'm looking at that and I'm like, that's a very undervalued opportunity here in SoFi stock, okay? Now, you got to understand the goalpost here. If we want to look at SoFi, at the end of the day, what is SoFi trying to be over the next 10 to 20 years? They're trying to become a massive, large financial institution, right? That's really what they're trying to do. They're going to have their tech platform, great, but they really want to be a JP Morgan. They want to be a Bank of America. They want to be a Wells Fargo. But the difference is, once again, set up for the next 10, 20, 30, 40 years, not kind of old school business model like those companies. But where's the goalpost here? Well, if we look at market caps, look at a Bank of America, $274 billion, at JP Morgan's, the granddaddy of them all, everybody would switch spots with JP Morgan, right? JP Morgan, $507 billion market capitalization, Wells Fargo, $184 billion, HSBC, $148 billion, PNC, $61 billion, SoFi's $8 billion. And who's taking market share? Who's coming to eat everybody's lunch? It's SoFi, right? So if I look at this, I'm just like, even if SoFi became a PNC, right, which I think SoFi has much bigger ambitions than to become a PNC, but a PNC, $61 billion, I mean, that's, roughly almost, that's over a 7x. That's over a 7x from here to just become a PNC. That's where the opportunity here, you look at it over the next 5-10 years for SoFi, and it's like, oh my gosh, this is massive. Absolutely massive for this company, okay? So, nonetheless, I think SoFi is very undervalued right now, and this is why I started a position, and I, like the way the setup is here, okay? Now let's get into some other very important subjects, okay? Such as what happens if a great financial crisis 2.0 starts, and I don't think that's something that's discussed almost ever, or if it is in the SoFi community, I never really see it. I see a lot of bullish thesis, but I don't see a lot of people talking about what happens if we had a great financial crisis. How does SoFi fare in that, okay? Then we'll get into if I'm going to buy this in the public account, how big I'm going to build it, and when I'll stop buying this stock, okay? So, here's the deal, okay? If we have a great financial crisis 2.0, what's going to happen? Well, there's many things that are going to happen in that, okay? One is unemployment's going to go up substantially. We've been in the 3% range for quite a while now at this point in time. If we have a great financial crisis 2.0, we're going to, we can call it 8 to 10% unemployment rate. So substantial. We're talking about millions of jobs lost, right? And then a very tough job market for years to go in the future after that, okay? So that would happen. Loan growth would likely go down substantially, right? Because you'd have even a bigger contraction in the credit markets overall. And also a lot of people, because of the displacement and unemployment, potentially not paying loans, their credit scores would drop, so then it would be harder for people to get loans coming out of that, even once they get jobs, and their incomes start going back up. So you would have a bad dilemma there, right? Loan growth would drop substantially. Credit scores would drop substantially for a lot of people, right? Not everybody, but a lot of people would be affected by that. Then on top of that, the Fed would cut rates. If we had a great financial crisis 2.0, where's the Fed going with interest rates? Are going back down to zero. In that sort of situation, if we really had it that bad, right, which would be a very hard crash landing in this whole scenario. That wouldn't be a soft landing, a medium landing. No, that would be I don't even know if we call it a hard landing. That'd be a crash landing, like the plane just, the wheels never came down on that baby and went boom, boom. That's the situation, okay? So the Fed would cut rates back down to zero. There would be a lot of big banks that would go under in that situation, and so the amount of financial institutions that went under would go up substantially. And when I talk about substantially, I'm talking about they would go up in the thousands of percent on a year-over-year basis in that sort of situation, right? Which would eliminate potential competition for SoFi out there, right? All those banks going under would not be a good signal, especially for the younger generation, seeing all those big traditional banks going under and going bankrupt, and then hearing stories about that, and then this bank just got acquired by this bank and had to be rescued by FDIC and all these sorts of things. That would just give SoFi even more credibility, I think, than ever, especially for the younger generation, getting to see all that play out, because they're going to be talking about that all over TikTok and Instagram and everything like that if that was playing out, right? That would be the drama of the day. Then, obviously, some loans would not get repaid, and that would not just be for other financial institutions, that would be for SoFi as well, right? Loan losses would definitely go up if we had that sort of situation. So, you can call it maybe 10% of loans don't get paid, 20%. It's a pretty big number, regardless, okay? So that would very negatively affect the financial statements of a company like SoFi and anybody that does any sort of loan business in that situation, right? SoFi's profitability would go down immensely, and there is a potential SoFi could go back to taking losses. Again, if we had a great financial crisis type situation, I think there's a decent probability that SoFi would go to taking losses again on their business model if we had an actual great financial crisis 2.0. The chances the Fed would rescue the financial system very high. If we had a great financial crisis 2.0, the Fed would come in and do whatever they had to do to try to, let's just call it, stem the problem there. They would have no choice at that point in time, right? So they would all play out that way. Now, in terms of SoFi specific, Anthony Noto, who I think's done a pretty darn good job running this company through a very challenging environment the past few years, about as challenging as you can get. If you listen to this man talk, listen to his interviews, listen to him on the conference call, I think the man's very conservative with the economy. Even if you look at kind of what they're expecting in 2024, he's not expecting a good economy. Listen to the type of unemployment numbers he's talking about that we're going to hit in 2024. Listen to the type of disappointing GDP numbers him and the management team expect for 2024. I would not call him bullish at all. I think he's extremely conservative. I think he's borderline more conservative than Jamie Dimon. And I think Jamie Dimon should be one of the most respected bankers in the world. I think he should be the most respected banker in the world, Jamie Dimon, right? And Jamie Dimon is very conservative with his outlooks, and that's one of the reasons he's got a $500 billion bank on his hands, right? And they've grown in the giant. He's a genius. And I just look at an Anthony Noto, I'm like, I think he's kind of, along that same wavelength, very conservative and just very pragmatic and very intelligent with kind of his decision making here, and not getting too over the moon bullish, I can tell you that. Certainly not. If anything, maybe he's a little too bearish, but I would rather have my CEO of a financial institution be too bearish on the economy versus too bullish on the economy. I can tell you that much, okay? Now, here's the deal, okay? If we start taking losses again, let's say SoFi, is making money hand over fist in 2024, but the big one hits, the big recession hits in 2025, right? Great financials 2.0. Which, once again, that's a whole debate if that would even happen. But let's just say it happened. I think the stock would probably go back to the $4 to $5 range, which is where it was back in 2022 when the company was taking big losses. You look at the losses the company was taking back in 22, they were big losses, okay? And you look back, obviously, at 21 as well. But I think that's where the stock goes. If we have a great financial crisis 2.0, the stock goes back to the $4 to $5 range. I don't really see there being a situation when I look at the balance sheet, if you're wondering about bankruptcy for the company. I think the balance sheet's in a pretty good situation. Over $30 billion in total assets. That's versus total liabilities about $24.5 billion. So, equity here is well over $5 billion of equity. So I like that. So I think SoFi could weather the storm. And the company's weathered big losses before. Whereas that's a differentiating factor between SoFi and a lot of the other big financial institutions. Many of the other big financial institutions are so used to making big profits that when all of a sudden they start having to take some losses, what happens with those companies? They go under. They literally go under. A SoFi, they've already done this. They've already taken big losses. They know what it's like to take big losses. They know how to adapt their business model when they take big losses. And then they know how to get through that storm and out to the other side. So if it was a financial institution, I'm like, I think they would be able to weather the storm. And if of an actual great financial crisis, I think SoFi's in a pretty good situation, right? So that's kind of my 2 cents in regards to that, right? They go back to taking losses, and guess what? They've already done that and before. No. Could I buy this in a public account? How big could I build the position? When do I stop buying the stock in terms of stock price? Okay, so here's the deal. Okay, SoFi, I think there's a high probability the stock could enter the public account. What I'm really trying to figure out here now at this point in time is, do I want to own PayPal and SoFi in the public account? Because I already have built PayPal into a pretty big position here, and so that's something financial related. SoFi is something financial related, but I've been thinking more about that. I'm like, PayPal and SoFi are so different. They're so different. The use cases for a PayPal and Venmo are so different than a SoFi, right? I'm not going to PayPal and Venmo to take out a loan. I'm not going to PayPal and Venmo to take out a mortgage or even to set up direct deposit or things like that, right? I'm going to a PayPal or Venmo to transfer money to, a friend of mine. I'm going to PayPal and Venmo to pay somebody out overseas who does VA work for me. I'm going to PayPal and Venmo to do things like buy something online at a website, and I don't want to enter in all my info, and so I just say check out with PayPal, it scans my face, and boom, all my info's entered, and I buy the product. That's a very different use case than a SoFi, where you're looking to set up direct deposit, and you're looking to try to utilize a savings account, and you're looking to potentially take out loans, and do a student loan refinancing. It's a whole night and day difference. So I put a SoFi much more in a category of like a bank, versus a PayPal I think is just a traditional fintech. Like PayPal is really the definition to me of a fintech, whereas SoFi I think is just an insanely fast growing new age bank. That's my opinion in regards to that. So the more I thought about it, the more I'm like, I could own PayPal and SoFi in the public account and feel comfortable having those two positions on. Okay, and I am actually very bullish overall, by the way, on a fintech for the next many years. Many years. Like, I feel pretty confident in several stocks in the fintech space, but I think the two that kind of take the cake here would have to be PayPal and SoFi. Now, in terms of how much could I add to the stock, I'm thinking maybe $50,000 to $100,000 worth of the stock, which for me is a good sized position, but it's not like something overwhelming where it's like, oh my gosh, this is like an insane position. And the way I'll put it is I have a lot of confidence in SoFi here, but with that being said, do I have as much confidence in SoFi as I do a Meta? The answer is definitely not. Do I have as much confidence in a SoFi as I do a Tesla or an Amazon or an Elf? The answer is no. I have a lot of confidence in a SoFi, enough to start a position here and build that position in a pretty decent sized position, but not enough where I'm like, this is like, a Meta type stock in terms of risk reward. Now, we'll see what plays out over the next few quarters. It is a potential that if they keep boosting these numbers up over the next few quarters, there's a potential, next thing you know, I'm like, oh my gosh, like this company's being so well run, their numbers are exploding so fast here that I do get to a point where my confidence levels are sky high for this stock. And I go to a situation where it's a top 5 confident stock I have. Right now, it's not quite there, but the fact that I'm buying it is a big step in the right direction. I can tell you that much. Okay. Now, when will I stop buying this stock? Well, I think that's a good question. Today, the stock's $7.83. So where do I stop buying the stock? Okay. Here's kind of my thought process. So I would slow my buys if the stock goes over $12. Over 12, I start to slow buying. Okay. I would stop my buying completely if it goes over $15 in the next, let's just call it year. Okay, now 5 years from now, it could be a whole different situation. But if the stock goes over 15 in the next year, which is a potential, by the way, if they keep, having these numbers go the way they do and we don't get a big recession, I mean, that's a potential. I would stop buying over $15. Now, my thing is I'm going to hold SoFi long term unless the story changes massively here where, the company starts taking huge losses again or the growth rates slow down substantially. And that's something really negatively it changes. I'm going to hold the stock for the next several years because I just think the opportunity here is pretty massive. And so even if it went to 15, I'm probably not running out of SoFi. The stock would have to go up so substantially from here, it'd be ridiculous to make me say, okay, I got to go ahead and cash because I'm just looking at this company. I think it's the new age kind of financial institution here. And so I just think they're very well positioned with Anthony Noto there. Okay, guys? Hope you enjoyed today's video. Hope you got a lot of value out of this one here today, folks. The Twitch live stream tomorrow, it's likely going to be a record breaker. If you want to join us for that, make sure you join us for that. Pin comment down there. Make sure you follow me on Twitch and have your notifications on, so as soon as I go live, there'll be a 3 to 4 hour live stream tomorrow. It's going to be insanity. Much love and have a great day.